discuss the surplus versus deficit and how do buildings go from an operational standpoint and how did we get there? Or how did the buildings do from an operational standpoint?
Yep. So sometimes, so if you look at the operations, you'll see that there are often numbers that may not align. So, most co-ops and condos, your budget zeroes out. All of your income and all your expenses should be zero at the end of the year. And sometimes, most of the time, that doesn't happen. And some of the reasons why is flip tax, transfer fees, that's considered operational revenue. And really hard to predict sales or even budget for that total. So if you have 6 sales in 1 year, you may have a surplus because you didn't expect to have that many sales. Or on the flip side, if you have 0 sales in 1 year, but you expected every year you budget to have at least 2, then you may have a deficit because that operational money that you budgeted for did not come in. So that's one reason.
Something that you caution against, like utilizing that as an operating.
100%.
Yeah.
100%. Yeah, we just took over a building that the presentation that they were receiving from their prior accountant had transfer fees as part of operational revenue. It looked like they were doing fantastically every year. And I told them, I said, I'd like to change the presentation for you this year. And I put the transfer fees in other items below the line. Mm-hmm. And it highlighted the fact that the building for the last 2 years has run a $150,000 deficit. And that's, I get it. Listen, boards and buildings could do what they want. They're in control of the budget. Obviously, you're hoping the building will select the right people to make the right fiscal decisions. And also it's easy for me, for us and for management to say, don't do it, just increase maintenance 10%. But obviously they're owners in the buildings themselves. It's a hard ask. But when you're looking at such a large number that you're plugging, really, for lack of a better term, every year with transfer fees, which I find to be a fantastic way to build up your reserve account. It's really not like, it's really, yeah. I really try to push away from doing it that way, because your maintenance, your commercial income, and other revenues should offset all of your operating expenses. And the transfer fees should be cream on the top, and that should just go into your reserve account. So, so that's exactly this first point is you might say, oh, wow, we made $500,000 on the financial statements. And the manager goes, well, we didn't do that well. We can't pay our bills. So the answer is, are we presenting the financial statements incorrectly by showing transfer fees as part of operating revenue or not? So
yeah, because we hear that a lot when we're taking over buildings, is that their budget, they're operating on a deficit, or they weren't being given good advice, and why. And I mean, that to me right there just makes a lot of sense. How will you know if you're heading into a good year or a bad year? And some buildings don't even have, flip taxes and what have you. So it definitely makes sense that you wouldn't necessarily view it as an operating expense.
Right.
All right. Sorry. Keep going.
And then the second thing, depreciation expense, shown as operating. So depreciation we put as other items. We don't see that as an operating expense. So you may look at the bottom line, specifically at a co-op, and say, well, I have a $100,000 deficit, but a majority of that will be your depreciation and or amortization expenses. So that's something to make sure that when you are looking at the financial statements, make sure you're just looking at the operational income and expenses. And then the other items, again, it will be, as Avi pointed out, normally we like to put them below the line as other items: transfer fees, your depreciation, amortization expenses, so that it is clear that when you see your financial statements at income and revenue, the revenue and expenses page, you're looking at the operations. How did we do with, everyday expenses, everyday income that we expect to have every year? And then thirdly, the capital projects, specifically in condominium, these may be budgeted as or presented as operating expenses. Again, these are another one that we put below the line So that if you have a capital project that's $1 million, a facade project, you're not including that with your everyday expenses. You see that that's another item, it's separated, segregated out, and you can see that that specific expense is not, it should not be included with your everyday operation. And then thirdly, if you look at your management report and see that, you know, you did have, or fourthly, sorry, cash and accrual basis presentation. If you see at the end of the day that you have a surplus of $100,000 and you think you're doing great, but then what we do is we go through all of the unpaid bills and make sure that everything, all the expenses for that time frame are included in the management report. I know Avi and I were talking before this presentation when we were preparing. We had a client that we took over a few years ago, and the board didn't realize that they had, you know, hundreds of thousands of dollars of unpaid bills. So when you're looking at the financial statements in comparison to the management report, you want to make sure that that the board is also, and that the property managers are aware of those unpaid bill lists, because if they're for, you know, specifically December year-end 2021, we're going to take those expenses, add them as expenses, and add them as payables on our financial statements.
Sorry, I was on mute. How do you guide buildings when they have that issue and you're taking over? It seems like a board might be a little frustrated by that. And it's not necessarily our fault, but you might have found
it. They're also doubly frustrated when they found out it was in front of their face the whole time.
Yeah.
In the month of the report, and they just, you know, no one took a look at it. And obviously there's a duality there where you know, they're not paying attention, and at the time, you know, the property manager that was assigned to that building at that company, obviously it wasn't ACAM.
Yeah.
Obviously,
not I.
But some
Never.
boards don't know. I mean, some boards are not, you know, they don't have a financial background. They're not a real treasurer, and they don't know. So
right, no, agreed.
You know?
And you know, in that specific situation, I know they remember they called a meeting. I came in. I think Sarah was there also, and someone on the board who was an accountant. She said, "It's okay, Avi. You could tell them they were wrong. That the board." She said, "She's like, we haven't seen this," and I'm like, "It's been in your monthly reports for the last 8 months." I said, "I'm not gonna lie for for anybody, but that's just, you know, the reality is it's been sitting there as a report that you owed this money." So, you know, that's why we always try to highlight it. It's both, you know, make sure as a manager, so this way they don't try to, you know, pin it on you. When you go to those meetings, you say, okay, how are we paying for these bills? You know that we have 250,000 of unpaid bills. Don't assume they're looking at it, you know, just to cover yourself. And to answer your question, Lisa, about what do you do with it when you inherit that? I mean, there's really no good answer. You know, there's no money tree. However, first is make sure that you get copies of all the invoices, make sure they're legitimate. Because I've heard stories where I guess vendors find out that there's a building that's switched, they have a lot of unpaid bills, and they'll start sending in invoices. Oh yeah, you never got this bill. We did this work 3 years ago. We've been paid, and the agents think that you know, you need to have someone sit down with the resident manager or whoever has been there historically and go through that list of unpaid bills and say, you know, did we do all this work? And is this all legitimate? So that's step one. Make sure it's legitimate expenses. And then you gotta make a priority list and ask everyone for some patience, whether or not there's money in the reserves to start paying it off, which again, I'm not going to suggest that should be done. But a lot of times we have buildings that will just assess over, you know, don't increase common charges. That's not the solution. These are past bills. Come up with an assessment to say, all right, we have $200,000 of unpaid bills we inherited as a board from the prior board. You know, our current budget is you know, is okay. You know, we've balanced our budget. How are we going to go and pay off the old bills? And you know, let's say 200,000 over 12 months, collect from the owners to pay the bills. It's an
Mhm.
unfortunate reality, but at least do the due diligence, to make sure they're all legitimate bills first before you assume they're to pay them off.
Do you find, yeah, because I was gonna say, in buildings that are like, first newly assembled boards from the sponsor, I feel like a lot of the times that we're speaking to these types of buildings, they have these unpaid bills that are holdovers from the sponsor. And I can think of like one building where basically they're gonna have an increase in 65% of their common charges because it was so bad, like their
Wow.
bills hadn't been paid for 6 years by Con Ed or something crazy. And
Wow.
so do you see it more common with, new developments, or it's kind of across the board?
I've seen it both. I've seen it in both situations.
Interesting. All right.